Okay, welcome everyone. We're going to talk about stock charts. We're going to do some technical analysis. The week is over. I didn't do a video yesterday. I wasn't feeling too well, but I'm feeling a lot better this morning. So we're going to look at how the week ended. It's November 21st, 2020. So we're going to look at how this week ended and really give us an idea of any setups that are starting to play out, what the market looks like it's about to do. We're looking for major trends that we can trade, and we're looking for trade ideas that we can jump on and swing trade. So we're going to get right into that. I'll start out here with the TLT. So the TLT is 20-year bond treasury fund. It essentially is longer term bonds. And this is something I pointed out earlier, that it was actually setting up bullish bonds. Bullish bonds means interest rates are falling. And so it was setting up bullish, and you can see here's your bullish divergence right here on the daily chart. See the RSI, how it is uptrending basically, where you have a low peak right here, and then you made a higher low right there. And yet if you go to price, and I circled it in a past video, price right here had made a lower price right in here. So the price was lower, and yet the momentum was higher. So that was bullish divergence. The momentum is diverging from price, telling you that price is likely to follow and converge with momentum and move up. And that's exactly what we've seen so far. So then what I usually wait for is a break of a trend line. And the only trend line I can really mark out that captures this point right here is the one that I have marked. It's not the best because, again, I like more than two data points. You need more than two to make a trend. But it's the best I could do. If I move it down here, we get a couple, and this maybe was a false breakout. But this is really the benefit of the doubt. So we're just going to leave it there. And you can see on Friday, impulsive break higher. So there is an impulsive breakout of that trend. Let's see how this reacts on Monday. If there's continuation, then I think that is a pretty valid breakout. And that sets TLT up. Most likely you've got, TLT is not a big mover, so understand that. On this one, you can take a larger position size because the volatility is a lot lower. Again, adjust your position size according to the volatility. TLT doesn't move a lot. So you can see here from about right up here, which is we've got some resistance right up there. So that might be that's probably the target. And from where we're at now to there, that's a move of about 6%. So again, the volatility is not nearly as high. So you can take a larger position size and ride this thing up to, that 172 area. So that's the target. And I'm going to be, I didn't catch this one on Friday because I wasn't feeling well. But if it's hanging around this area on Monday, I might take a position long for a move up to 172. Let's keep an eye on gold. I think gold is going to be setting up for a nice long-sided trade to the upside. But we need I'm looking for a little more downside. So here's the daily chart. I've got this uptrend line right here, and it seems to be working. However, we've broken down below that trend line. So the trend line is not my favorite because we had this break right here where we've had kind of a violation of the trend. So I just marked it out to see if I was going to get any kind of reactions. But what I'm really looking for is a move down to this level, about 1790, 1800. And that's your former highs. That was your major resistance back here in the last bull market, going back to 2011. And you can see when we broke above that level, we just had an impulsive break higher. So that is clearly a breakout. We've broken out above that major resistance, but we're coming in for a back test now. And you can see it's just flagging out, basically creating like a bull flag where it's just doing something like that. I'm looking for just a short intraday or intra-week dip down to tag support and then start to recover. Or even break slightly below it and then recover. But some kind of reaction around that area is what I'm looking for. And that is really the downside that I see. Now, if you look at the daily, we're building some bullish divergence now in the daily chart. So if we get a brief dip down, that's going to just move it's going to look something like this. It's going to be a divergent low. And that's going to be a high probability area to go long on gold. So that's what I'm looking for, and I will be buying that. if we get that. Looking at some of the miners like Barrick. So Barrick, just for anybody that hasn't been with me for that long, I was buying Barrick. Here's your downtrend line in Barrick that I started pointing out back in 2020 when I started the channel, basically 2018 and stuff. And so I was buying Barrick down at support, down around these areas. I was buying Barrick, and then we broke out up here, and I bought more Barrick. And so I was buying Barrick and building a position. And for the move that for this big move, and it was about 190% gain on that move, and it was my largest position at the time, so it was very profitable. But I exited that trade right here on this day, right when we ran up to 28.27, and I got that level going all the way back. If I go to the weekly, that was kind of the major resistance level going back to 2013 of Barrick, or sorry, that was right here. It was this level right there, which we had a reaction, but it was kind of the former support area for going back to 2006. It was major support. And as you zoom in, I found that level because you can see we had reactions. And if you look at the hourly, it's a lot more clear. Sorry, I know I'm all over the place with this chart, but I'm trying to show you guys. Yeah, we'll just have to move on. I can't get there. But there was a reaction right there. You can see the little cluster of days right there where we had the reaction. So it held as support. So I marked that out. And then when we ran straight up into there, I sold my position because that was major resistance. And so far, you can see here on the hourly chart right there, 28.40, that is major resistance. And since that time, since when I sold my position, the thing's only gone slightly higher, but pretty much sideways. You can see, yes, it went another 5-6% higher, but for the most part, just sideways. And it's now down about 14% from where I sold it. So looking good. Now I'm looking to buy it back, but I need to see some bullish divergences starting to build. I think we're setting up for it. You can see how low the hourly RSI just went. So if we continue and make a new low pretty soon, most likely going to be a bullish, going to start building bullish divergences on the hourly. And then we'll look at the daily to see if, we get that there on the daily. It's not there yet. Here's Agnico Eagle, another one that I like. It is clearly just downtrending. Momentum is moving down, and price action is moving down. So we don't have anything else telling us that there's anything different than just downward trend. Now, when we start to see some bullish divergences build, it may be in gold and some of these other miners, it'll probably show up here, and then we'll take action. Next level of support on this looks to me like around 62. It's going to be right around the 63.70 down to 62.40 range. Healthcare XLV. I am short this position. I got short when we broke down right here on Thursday. And so far, looking good. You can see when you short or take a position at the right entry, even if it moves against you, you can see, really muted buying, basically. So it sold all the way down to here. Then they bought it back up. It closed here. The next day on Friday, just kind of chopped around sideways. But there's no buyers stepping in and just recovering the broken support. The buyers are muted buyers, or maybe some short people who got short way up here that are covering for some profit. But again, really muted buying. So we got lots of gaps. See these gaps down here on XLV. Some of these gaps are likely to get filled. So I think if you go to the hourly chart here, you can see a dip down to about 105.70. Probably get a reaction there. You got another gap right here at 103. It's about 103.63. Probably get a reaction there. And then we got the lows of this recent range of 101.04. And a break below that, we got 97 down here. So those are the key levels that I'm watching for. I do expect it to go. 97 is my final profit price target, I guess, for this thing as of right now. But, I think we'll get some reactions in these other levels and work our way down over time. So it's a swing trade. XLF financials. On the hourly chart, we've got negative divergence right there on the hourly. You can see Momentum has started to fade and price continues to work its way higher. So this is a divergent high probability of failure. And we got a gap right here. So gap fill, I think is, we'll just put it right there. Gap fill, I believe, is a likely target at this point. And from here down to there, it's about a 7% drop. I think there's a high probability at this point, given the negative divergence, that we're going to gap fill. If you look at the daily here, we do not, we do have negative divergence on the daily. It's just starting to show up. You can see it right there. It's right there. And, there's your divergent high right there. So again, gap fill, I think, is the highest probability target. And then we'll see, we'll watch this for a continued downtrend. Here's XLE, the energy sector, kind of an interesting sector. It's been really beat up and it has not had a lot of recovery. You've got some negative divergence here showing up on the hourly, and if you look at the daily here, we're not getting negative divergence on the daily. So again, negative divergence showing on the hourly maybe is good for just a pullback down to this support line, 34.24, but the buyers would probably step in there. So I don't see anything extremely bearish at this point, and I would just, this thing's continuing to move higher. I know the 200-day moving average is going to probably be falling in around here. We can take a look at that. We'll just look at the SMA if I can find it. Right there. I click on it. There it is. So yeah, there's your 200-day simple moving average. We're right at it. So again, we're getting a reaction around that. Now, to me, if we pull back to 34, 36, that might be a buying opportunity. But what I'm going to probably wait for is an impulsive break above this 200-day moving average. If we get that, expect, more upside. Let's look at some of the oil stocks. Here's XOM, just bullish momentum. You can see momentum is moving up, price is moving up. So there's nothing telling me that that's about to change here on the daily. We've got price resistance right up here. If I show you, it's right there. Let me erase this 200-day. Well, we can leave that up. You can see the 200 days coming into that price resistance right around 41. So a move up to 41, very high probability we get a reaction and a sell-off right around there. You've got major price resistance coming back here. You can see it held a support, then it finally broke. So when we're coming into price resistance and also the 200 SMA. So that's really what I think's left in this thing is a move up to there. I'll be taking profit right there. Okay, BABA here. I did miss this trade and I want to point it out anyways though. So here's what we got going on BABA. Here's your daily chart. And BABA, here this was your longer kind of uptrend going back to March. And that trend was broken right here. And it's a clean break. You can see it came in the form of a big gap down and then a sell-off. So that's a sell signal. That was your daily sell signal. So I think the larger trend is going to be to the downside. But I was noticing some bullish divergence building on the hourly chart. So you can go here on the hourly. And basically, I was seeing it kind of show up right here where you started to make slightly higher highs. And the momentum was kind of hanging in there while the price continued to move lower. You can see the price here, bullish falling wedge right there as well. So everything was kind of set up for a bullish breakout to the upside. And that's exactly what we got. You can see here, there's your breakout. Now, typically with these bullish falling wedges, you want to take kind of the widest part of the wedge, which is about there, and measure it at the point of the breakout. And you get your measured target, which is about right where we're at. So that might be all there is to the upside, but it was forecasted there in the hourly divergence. In fact, I did take a bullish long trade on it. It was not a very large trade, but I cut it, I believe. I just didn't like the price action that I was seeing. I wasn't confident in the trade, so I cut it, and then I missed it, basically. I missed the 4%, Well, from the breakout now, this is a gain of about, at the highs it was about 6%. So I did miss that, but I want everyone to kind of understand that, these bullish divergences sometimes show up on the hourly chart. And when they show up, usually they're good for that counter trend bounce, which is what this is. Going back to the daily though, the larger trend, we don't have bullish divergence here on the daily. You can see momentum's just moving down, and we've got momentum starting to move up here and price moving up. There's no divergence. So to me, that tells me that we're still in a longer term downtrend, and most likely this is a counter trend bounce. Maybe we even do a full back test. It's possible. And the RSI moves all the way up to maybe something like this. But we're still downtrending. The momentum will still be moving down, and that is likely an area where you'd want to establish or add to a short position for a continued move to the downside. Shopify, here's another example of a counter trend bounce that just took place. So here's your daily chart, and you can see we've just had big bearish divergence that has been building for quite some time. So this is a pretty big divergence, and you continue to make higher highs. However, price started to react, and now we've started to downtrend. Basically, you can see we're making lower highs, lower highs, lower highs, and we just haven't made a new lower low, but we made pretty much an equal low, and so we're downtrending. It doesn't look like it, but the momentum is clearly downtrending, and I suspect price will follow. However, we had a counter trend bounce this last week, and that was forecasted here on the hourly chart. So usually you can see these counter trend bounces starting to show up in the bigger trend. There's your divergence right there, where you have a higher low in the momentum and a price that was about an equal low of the former low right there. So price was making an equal low, momentum was making a higher low, and that signaled that there was a bounce likely. And there's the bounce, and that's a move from the low to the high of about 13%. But I think one's probably about run its course, because the hourly gave you the counter trend bounce, but the daily is giving you the more major trend, which is to the downside. Now, if it continues higher, it can burn through the divergences, and we can end that. But if you look at the weekly chart as well, big negative divergence there on the weekly as well. So momentum's just been falling off a cliff, and price hasn't fully dropped. Hasn't dropped that much yet. So I think we're probably good on Shop for a move down to this major trend line down here, which is probably going to be, if and when it does it, it could be a move of, 40%, something like that. I do think that's probably how this is going to play out. At least that's what the weekly and the daily tell me. And the hourly just gave us a counter trend bounce. The levels to watch really for the major breakdown is this level right here of about 886.40. You get an impulsive breakdown from there, and that should set this in motion to the downside. Neo here, I'm starting to get interested for a short on this one. And you can see here, we've got this uptrend line right here on the hourly, and we've started to build negative divergence where the momentum has been fading. If you look at the PPO, we're about to get a crossover, but we just haven't got that complete sell signal yet. If you look at the daily chart here, negative divergence is continuing to build on the daily while price has continued to chop around. We had this is a bearish engulfing candle as well. It looks like kind of an outside day basically, just barely, but that's the potential for a reversal candle right there. So you wouldn't want to see price go much above the high of this candle. A slight marginal high would be okay as long as it rejected and sold off from there. So I think we're going to reverse soon on this thing. So I look for a break of this trend line, this uptrend line here, get a nice impulsive breakdown. That sets in motion this other trend line that it's had, which is a drop of about 30-40%. So that's kind of the trade for now. And I know Tesla obviously just had a headline where they joined the S&P, but technically I think this is primed to sell off. Here's what I see on Tesla. Negative divergence right there. The RSI started to turn back down as well. The PPO is still coiled up, still have the bullish crossover right here. So we need to see that start to turn down. But you can see we just made a marginal new high right here. So above the previous high, that put in your negative divergence. So yeah, we can continue to make slightly higher highs or kind of do what's like popcorn effect, where it just kind of pops above it and fails and chops around. But we've got negative divergence there on the RSI on the daily chart. And Tesla never had that before, actually. So all this price action, when I was short all through here, and then I covered my short and said, I'm going to look for a better opportunity. That opportunity has now shown up technically on the chart. We never had negative divergence before. We've got it now on this new high that we just spiked up into on Thursday, and it hasn't gone anywhere since then. So to me, this is a better area to short Tesla. And if we can start to roll over here, then we've got some levels marked out down below, but we've got some gaps all the way down here. So again, I'm going to watch it. What I'll probably wait for if I go to the hourly is a breakdown of this level right here, 463.40. That's your previous resistance area. So a break back down below there, that would be a false breakout or a bull trap, and that should be your sell. That's going to be my sell signal, at least, for a move, a substantial trend to the downside. Run is back testing. I covered this a couple days ago, and I'm not in this position right now because it looks like it's back testing. However, if it can get a little bit higher, I'm going to add back to my short, because this is just a back test. You can see here, if I go to the daily chart, nice clean uptrend right here. We got bearish divergence that's continues, that was building right here. Then we got the breakdown. Looks like we're just coming in for another back test. So if we run up, if we want to go a little bit higher, and I don't know if it'll do a full back test, but if it gets close, I'll be interested in reestablishing a short. And I think this is going to be good for a move down to these levels right here, 44.80, and it's moving around on me, and 36.63. And then ultimately, possibly all the way down here at 23.43. Okay, let's look at triple Qs and the SPY, and then we'll wrap up. So triple Qs here, sideways action. I was watching it on Friday. It did sell, it's closed, sold off into the close. But again, that's just chop. It's day trading chop that if you see it, you can jump on it real quick, but you never know when or where it's going to turn around or go against you. And so it's really hard to trade with any kind of size, because when you take a position and then it spikes against you, you're losing money, you're gaining money. It's just chopping around. So again, I just would rather prefer to kind of sit out and let it show me a little bit more information before I can take a swing trade on it that has a higher probability of actually being right. So, right now we've got levels of, we got this kind of level, right? It's really started to move up to about 293.75, and, we'll call it 287.04. So, yeah, we've got some levels to watch, but there is, and also if I mark this out on the hourly, you can see we've got negative divergence right there, where, we made a slightly higher high right here, and, there's your negative divergence. So tells me we're going down on the hourly. Let's look at the daily here. No negative divergence on the daily, except we do have it right here. You can see if I mark it out right there. Let me get rid of this one. There's your negative. It's tighten it up. There it is right there, where we made a new slightly higher high. So yeah, we have negative divergence on the daily chart. We have it on the hourly chart. Just looking for some sort of an impulsive breakdown to confirm that that's ready to move down. Now, if we do break, I think we're going down to 269, 270, somewhere right in there. And I think we're going to break that. Ultimately, I think we're heading down to the bottom of this price channel around 233 to 235. I don't know when we'll get there, so I don't know exactly the price, but I think we're heading down to the bottom of this price channel, which comes all the way back to the 2009 lows. There's the 2009 lows. Reaction held as support right there. A couple dips below that were saved by the Fed. Each one of these moves down was most likely going to start the bear market that I think that we were due for. But the Fed jumped in here, the Fed jumped in here, and they've managed to pump it all the way back to the upper end of the price channel. We're at a very low probability area where the price will continue higher from here. Yes, we could have a melt up scenario, but again, Parabolic melt-up moves are usually the ending move, so I'm not going to chase that move. I'm looking for the beginning move of the, a big, nasty bear market. Flipping over to SPY, let me zoom in on the daily chart here. Daily, I'm not seeing negative divergence. I mean, yes, we do have it. If you go back right here, you can see there is negative divergence right there, where we made a high and then we came up and made a new slightly marginal higher high with lower momentum. And you can see since making that marginal high, we've faded and price is back below actually the previous high. So weak price action, when you get these pops and making marginal new highs and putting in bearish divergence, there's a high probability that they fail. So I think we're going to break down. And if we look here at the hourly, let's see what we got going on. We don't really have, obviously we have negative divergence coming back to here. It's right there. Made a new higher high on lower momentum. So what I'm looking for, again, it's just sideways for the time being, but a break of 350.75, an impulsive break, that puts us in motion, most likely down to 321.37. And because this would probably have proven to be a bull trap, I think if we get down here, we'll break down and we're going to go lower. Okay, that's all I have for this video. Take my training course. That's in the description below. If you haven't done so already, these videos will help. Once you've taken that course, you'll have a better understanding of what I'm pointing out and talking about, and then you'll be able to spot it for yourself in charts and take trades without me pointing them out. I can't catch all the trades, and I can't see them all, but if you guys have some of the skills and knowledge, then you'll be able to spot them and take them and point them out to me. And give me a thumbs up if you find value in the content. I'll catch you guys on the next video.